They gon' love me for my ambition. Easy to dream a dream.
Welcome, guys, on our market recap. So, I took a trade on the volatility 25 index. So, this is how the trade went above. Let me dive deep into the chart so you can see how I took the trade. So, first, I was looking at the chart from this point of view. I was looking to fill out that low that you can see that. Let me mark that low so you can see it. That previous low, I was looking for the market to come there to give us a double bottom before actually going up to the upside. I was waiting for that double bottom, but what we had there in the market, as you can see, the market gave us a gap there. So we had a market gap before actually going for the bullish run. So the market could come back to fill up that gap and form a larger bull, bull structure, which will be a bullish flag to go to the upside. So there's a high possibility that the market could do that. But now focusing on the recent price, on the recent price chart and looking at this recent low, if this recent low, that's part of that bull run to the upside. Looking at that part of the bull run to the upside, we'll zoom into the 4 hour time frame to see the chart very clearly. As you can see, this is how I took the trade. I was looking at it from this point of view. See, as soon as the market reversed there and from the large impulse, then we had this larger correction, which is a bullish flag to the upside. Now we're forming another bullish flag. We're going predicting another impulse to the upside. That's what we'll be waiting for. But how will we dive into this previous bullish flag? We will hit that what I call an inflection point. So the price always comes back to retest that inflection point there before actually giving us a momentum run to the upside. So price came back to retest it. So on the 1 hour time frame, it's very clear that within that bullish flag, you can see I took my entry on the mini double bottom within that larger bullish flag. So looking at that from that inflection point, I used that as my first touch. You can see the market is moving correctively there, and I said that's the beginning of that correction. So I used it as the first touch, and we have the middle touch there, and then we had the third touch in correspondence with the inflection point. So it's forming a confluence, which increases the probability for us to go to the upside. So from that inflection point, then here I could have taken my entry, but I did not take my entry because the trend line has not yet been confirmed. So I couldn't confirm my trend line at that moment. So I had to wait for actually more confirmation. So that's when I had this bullish retrace. This is a bullish engulfing, you can call it that. So I had an entry after that bullish engulfing or that bullish retrace, and we had a move to the upside until that 90% rule. So my target was at the 90% rule. So I moved price to the 90% rule and I got taken out there. And then now I'm looking at this now trade, which is a live trade that I've just taken. So that's retesting that previous high to go up as a support to go up to the upside. And now looking at this, we can see that it's also in line with that previous corrective move to the upside. So we could have that move to the upside. But how I manage it is if it reached the trend line, move my stop loss to break even because the market is very unpredictable. So the market could actually move to that trend line upside and then retrace back and then take you down for a loss. So you don't want the market doing that. So you rather move your stop loss to break even because the market could just form even a larger bearish flag. So it's important for you to protect yourself and protect your capital. So that's how I took the trade. You can see it's a bearish flag, a smaller bearish flag compared to the previous bearish flag.